Okay.
One other bit of news here: India unleashes silver as banking collateral with a 10 to 1 gold silver ratio, declaring silver global monetary metal. And I've heard,
Yeah, except I do think that that's probably the area that it's destined for, simply because of the the shortage of silver as compared to gold. And we haven't gone into a global recession yet. And when we do, 60% of the 2/3 of the silver supply is a byproduct of mining metals that are very sensitive to recession risks. And so, just when people start rushing toward gold and silver as a monetary metal to protect their wealth, that's when the supply dries up. At the same time that demand increases, supply goes away.
awesome.
Okay.
So, Mike, you asked me to include the inflation calculator from the BLS because we were talking about silver and its all time high of 5,250 back in 1980. And it has the same buying power today, according to the government CPI, of about $218. And of course, we're
Yeah.
still not there yet. So we're well below the inflation adjusted high. And this just shows us how much more time there likely is in the bull market before we get to those previous highs.
Yeah. Yeah. Silver is still a bargain, and we're going to show that with the gold silver ratio. But I also asked you to do the inverse of this to give people an idea of where silver is compared to if its previous high in 1980. So let's there we go. So
Exactly.
it's at $12 and is that 61 cents or 80?
61
61.
cents.
Yeah. Okay.
Yeah.
Yeah.
So still
So
a long way
it's
to go. Still
a
another
long way to
four,
go.
still
Right.
another four bagger relative to the dollar. And that's just based on the CPI. Of course, it's probably a lot more than
Yeah.
that to account for real inflation.
Yeah.
So
You've put together a spreadsheet and a calculator that sort of splits the difference between the original CPI and the new CPI. And the truth really does seem to lie somewhere in between. But what was the inflation? I can't remember what the inflation adjusted price was compared to the original, the Shadow Stats CPI. Wasn't it
I
close
think
to $1,000 an ounce?
it might have been 1,999, like basically
Wow.
2,000.
Yeah.
If I remember
2000.
correctly, I'd have to check the
Right.
spreadsheet, but yeah,
Which seems insane, but everybody has to remember these are just this is the way the government used to measure inflation. Those are government numbers that we're using.
yeah,
So yeah.
exactly. So let's take
Okay.
a look at the gold silver ratio. And what I did here, so the gold line is the normal gold silver ratio that everyone's used to. The
Uh-huh.
silver line is basically the price of, instead of 1 ounce of silver, I did 100 ounces of silver. That way we get whole numbers on our scale instead of, 0.05, 0.06, something like that. They're actually whole
Yeah.
numbers. So you can see the symmetry here and, the wealth cycle that you've identified, Mike. And it looks like it's going to close at some point. We don't know what day, obviously, but it looks like it's going to invert at some point, and that implies that silver will outperform gold by quite a bit when this reverts.
Yeah, like I said, it takes monetary demand, and we've seen the beginnings of that. But what's interesting is we've seen it pretty much all overseas. The what we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States. But in Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London can't continue overwhelming the physical market.
Exactly. Exactly. I have the same chart here presented logarithmically. I don't know if there's anything you want to comment on here, Mike. Otherwise, I have another chart to show.
Well, it just shows this wealth cycle more clearly, and the amount of reversion. And currently, we are at Show what's the next chart?
The next chart is the gold silver ratio in gold. It's the same thing we just saw. However, I've also plotted on the right scale the opportunity size in silver to catch up to gold in order to get back to the all-time high or the all-time low, depending on your perspective. So the all-time high for silver relative to gold was at a gold-silver ratio of 14 to 1. And we're
Uh-huh.
up around 80, 85. I made this chart a few days ago. I think the ratio is about 80. And so that implies that silver would have to outperform gold by 5.7 times in order to catch up. So it doesn't give, quote, a date or a number of years, nothing like that. But eventually
Okay.
it would have to outperform by 5.7x to catch up to the previous gold silver ratio.
Yeah, well, while we're making this, we're currently at like 85. So I just did the math again, and I come up with 85 divided by 14 is 6.07 times. So more than 6 times is the leverage. But like I said at the beginning of the video, it is a wild ride. So if you're going to climb aboard, make sure you strap in.
That's right. Yeah, wear a seatbelt, guys.
Right.
So yeah, very exciting opportunity for silver. So yes, a tweet from Luke Groman here. The U.S. federal debt has grown 8.5% compounded since 2008. So of course we did just hit 38 trillion in the national debt, and it's compounded 8.5% per year since 2008. And Rick Rule points out, not coincidentally, gold has increased 9% per year, compounded over an even longer time period. So gold keeping up with the debt.
Yeah. Yeah. Well, again, that's was one of the key premises to my first book was gold doing an accounting of the currency supply, the expansion of it, and this is an example of how well it does it, and it's done this over and over again throughout history. So that was just something that when I got into this and made a commitment to it, these factors that when I discovered that gold had always done this, and it seemed like it would always do it, that's when I just went. And, I used to be, I'd tell people that I was fully diversified, that I own both gold and silver. And really, though, for many, many years, that was my only investment, gold and silver. And everybody thought I was nuts, but it's turned out to be the top performing asset class of this century. So, and I keep on saying there are these rare moments in history where it's not just the safe haven asset, but it's simultaneously the safe haven and the asset that has the single greatest potential gains in purchasing power, the precious metals. So,
Absolutely.
yeah.
And I'm glad you've been saying that, because that's where I got the idea from. that's where I learned how to build my portfolio. So thank you.
Okay.
So this is going back, 25 years or so. And as we look to the future, we got to ask ourselves, do we think the US government is going to be in even more debt? If so, do we think the price of gold will account for it? Because looking at the gold futures market, you can buy gold for delivery 6 years out, okay, June of the year 2031. And the cost of doing that is just $4,600 per ounce. Likely a
Unbelievable.
steal. Isn't that crazy?
Yeah, it seems like there's a digit missing there.
Yeah, I know.
Should we move the decimal?
Exactly. Likely a steal.
Right.
So someone down here says, I'll take the double on that. And Brent Johnson reminds us, if this pays off, you will be settled in cash and won't ever get the gold. So he's probably
True.
right.
Yes, he is absolutely right. Yeah, the one thing that commodities exchanges are really good at doing is changing the rules. They make the rules, enforce the rules, and change the rules at their whim. So
we're going to have to do a video about that.
Yeah.
Okay, well, I want to end here with our meme of the day, which isn't so much a meme as something that actually happened. JP Morgan's Jamie Dimon says gold could hit $10,000. When the world's top banker starts sounding like a gold bug, the reset has begun.
Yeah, and I do believe that. So this is. I do believe that is what's going on right now. That is the reason for gold becoming 1/5 of global monetary reserves. That is the reason for all the trends that we've just seen in this video. And this monetary reset, there are things that happen very slowly at first, and then all of a sudden. This is a Hemingway quote, I believe.
Yeah.
Right. And how do you go bankrupt? Well, very slowly at first, and then all at once.
Two ways: gradually, then suddenly.
There you go. Right, gradually, then suddenly.